Okay, so this is a short little lecture. I've actually just cut this down to 5 slides. It's on IT systems. It's something that people who work as consultants and people, I guess, who are working in finance departments and companies can consider to be very, very important. What I find consistently when I work with students or when I deal with people in the profession, and then we have to go across and do work within a government, because my background is mainly working with governments, is that the knowledge of just what an IT system actually is and how it works is very, very poor. So this is something that, you'll forgive me for being a bit cheeky, but I feel you should need. It's something as well which consecutive examiners have kind of looked at and have felt that students should know as well. So what I've done is I've split IT systems into two. The first part is a short lecture, which I hope isn't going to last more than 30 minutes, which is basically background information. And then you'll see IT systems part 2, which is much more based around exam questions, which is not only much more based around, it actually is. We're going to do 2 exam questions, and I'll show you how it's going to be examined. For yourself, I hope you find this interesting, and it's something that in your work you should find useful. As far as just getting through paper P5 and knocking that off your to-do list, then the second part is obviously much more important. So sit back, have a look at what we're going to talk about, and then we'll go on and look at some exam questions after. So a standard accounting system, and particularly accounting systems for government, work on what we call a 3-pillar system. So you've got 3 pillars. So your first pillar that I'm going to describe here is your budget. So what happens is that you have a budget. Your budget says how much are we going to spend on ABC, what's the permitted levels, and the other thing which your budget system will do is, particularly when you have an ongoing business, so you're producing tins of beans, which are large numbers of identical systems, is that there will be a timing system in there. So you're not going to be given the whole year's budget to spend on the 1st of January. You'll have to spread that over a period of time. Obviously there'll be labour and wages, so you can't pay all of your factory staff the way through to March and then find in April you have no money and so on. So you get this idea of a pillar. You have a budget. So within that budgeting system, the second pillar that you have is the treasury function. And the treasury function consists of your available amounts of cash. So therefore your treasury department, and this is also presumably going to be a function of your accounting department, will monitor what's literally in the bank account. Now notice therefore that this is going to be on a cash basis if it's the amount of cash. So let's assume that you have a project and you want within your project therefore to buy 5 laptops for the project team. What will happen is that when you go into your accounting system, the accounting system will allow you to purchase those things if 2 conditions exist. The first condition is that you have a budget, and the second condition is that the company has some cash. If those two conditions actually exist, then you will find that you are able to purchase them. So it seems fairly straightforward, but you would be amazed at how few people actually understand how this system works. So we have this idea of the budget exists, the cash exists. If those 2 situations are in place, then the system will allow you to go ahead with processing your purchase order and purchasing your goods. So your third pillar or your third system, and can I just say with these slides, I was just looking at slide number 2 there, I wrote this for government, so if it says things like it will be set in the context of national law, that will only apply if it's a government. Then, so in terms of your system number 3 therefore will be your accounting. So your system therefore will count for these things. And what will happen is that also usually with Oracle and SAP and so on is that these things work in a similar sort of system to Lego. So you'll have a basic accounting function, and then your accounting function will have your chart of accounts in it. What will happen then is that there will be add-ons. So there will be, for example, a fixed asset. So as we purchase an item and your system picks up the code, so this thing is a computer, for example, assuming that it meets certain thresholds, it may be transferred to the fixed asset module, and the fixed asset module will then say when does the item come into service. When it comes into service, depreciation kicks off. You'll have your procurement model. So within procurement, therefore, we will have a requisition. So we have a requisition. The requisition is approved. That will go to the purchasing department, where it will be approved again in the concept that we have a purchase order. someone will go into the system and we will then have acceptance of delivery. Once you've got your acceptance of delivery at that point, then the thing will go into use and it will be depreciated. And your system as well will have various systems for disposal, whether things are lost, whether things are broken, whether things are sold, whether things are scrapped, and so on and so forth. For those of you who want a lot more information on that, look elsewhere in my website and go over to IPSAS on procurement, and you will see that the procurement system in terms of IT is there. For paper P5, I don't really think that you need it. But you do need to understand, as far as a computer system is concerned, that we have these three pillars: the concept of a budget, the concept of the treasury, and the concept of the accounting system. And in real life, certainly for government, those of you who work in accounting, it is, I'm afraid, the least important of the first three, of the three pillars. Okay, right, well, number 4 now has actually come up in the exam. So now we're actually getting to something. The first 3 pieces are just things that I don't think are really examinable. I've certainly not seen in the exam, but I think you should know them because they give you a good backdrop to understanding how systems work. Now, within that concept, systems do come up when we talk about all this stuff like process re-engineering. So I think the first 2 slides are useful. This one, certainly as a general topic for ACCA, is very important because this comes up right across the papers and has been included in P5 before. Excuse me. Right, so what are the differences between public and private enterprises? Now, this has been examined at many papers. Well, the first discussion that we have here, and bearing in mind that my background is much more government accounting, we have this concept of historic versus current. When you work with the government, particularly because a great many of them work on the basis of cash accounting still, well, the government is much more important that things are reflected historically. So therefore we have this idea that we buy fixed assets. How much did they cost? For the government, it's critical what comes out of the budget, therefore. So we have a budget for 1 year, a cash budget. Some governments are on accrual basis for budgeting, but very few, sort of New Zealand or somewhere. So, historic idea, we bought it for this price on this date and it is expected to last 3 or 4 years. Now compare and contrast that to what IFRS is moving us along with, and IFRS is moving much more towards current. So we've got marking to market with financial instruments, with investment properties and so on. So therefore, in a public enterprise, they're much more likely to be much more focused on the historic. IPSAS, for those of you who don't know, are international public sector accounting standards, and they are moving governments more towards, so they're based on IFRS, so they're moving governments more towards the more sort of commercial sense of accounting, but still much more important for governments, the role of historic. Number 2 in your list, the role of budget, the budget. The budget, as far as the government is concerned, is the way in which the government communicates to the population how they are going to spend what is in effect the population's money. So therefore you will find in almost all countries that the budget is a legal document. They have a legal obligation, there are restrictions on what they can do, they must publish the budget, however much hard they try not to, and the budget will have a legal format. Producing sets of accounts for the government and government departments is not something that very many of them see as genuinely being particularly important. So therefore, the budget is by far the most important thing. Now, if you take the budget for a commercial enterprise, particularly if you've got an accountancy practice or someone like PricewaterhouseCoopers, I certainly do not want to say that the budget is of no relevance whatsoever. It obviously has a function that it limits the number of people, it limits the amount of time, but it's much more flexible in what you can do with it. And certainly from my day working for accountancy firms, if this project comes in under budget, you can shift bits of costs, and there are various games that you can play with admin charges and so on. So the role of the budget and the rigidity of the budget is much, much less in a private enterprise. Right, the nature of the assets. Not all, obviously, but the government tends to have much bigger assets. They have roads, they have electricity power stations, they have airports, whereas many, many companies don't have these things. They will go down to the other levels. They will have land, they will have tangibles, they will have biological assets. The range of the assets tends to be much, much greater. To summarize this, most companies tend to have narrow bands of assets. Even if you take an electricity generating company, they will have electricity stations, substations, wires, etc. They are very unlikely to have biological assets, whereas the government will have the broad base. So we have a much wider level of assets. Also, in general, not against all companies, but against most companies, the assets tend to be larger, they're more expensive, they're more specialised, and they last longer. There are very few companies that will have roads, for example, which we expect to see in existence in 100 years. So government assets, public assets, tend to be larger, more specialised, more expensive. Cash generation. Right, for most private enterprises, if you take PricewaterhouseCoopers, if you take an electricity company, if you take a telephone company, cash generation is absolutely critical. Within this course, you will study various measures of failure, which include, having a sales manager, CEO, and all that. But cash generation for most companies is generally considered to be critical. Even for internet companies, where we had these companies that weren't producing any sales for 5 years and stuff, the investors were still saying, okay, when does cash generation start? That tends to be much less important for governments. Now, obviously, in times of recession, such as we have at the moment, we're moving to the situation where it's becoming more important, and accounting under IFRS is important, but many government assets do not generate cash. If you look outside of America, prisons, roads, orphanages, libraries will generate cash, but buttons compared to what they cost you. Cash generation. Much more important in private enterprises than it is in normal commercial organizations. Heritage assets. Heritage assets are those assets which are there to build the culture of a country. So whether you have statues of Lenin, whether you have undersea nature reserves, as you have in places like Thailand, in Scotland, where I'm from, we have various castles and things which are government funded to keep them alive. Most companies, as much as the CEO would like to have his statue standing outside the front door of their own office, do not have any concept of heritage. They're much more interested in the more short-term view of making profits and stuff. So no heritage or very little heritage in private enterprises. Regulatory. Right, the role here is particularly important. If you think it in an IFRS concept, we have a concept of control. So let's just talk about good old paper F7. You have parent company, and parent company can control a subsidiary because it has 51% of the shares or whatever the other conditions are. Now think about a government. A government has auditing regulators. They can step in and they can say, Institute of Chartered Accountants in Scotland, of which I'm a member, ACCA, we're going to close you all down and take you all over into the government. So the government therefore has much more of this idea of control, where they can at certain points in processes just step in and go, look guys, we've decided it's ours. Now most government bodies don't do that because of the expense and the problems and so on and so forth, but they can if they want to. So the government will take over a regulatory view, and in less inspired countries they will change laws so that they win legal suits and so on. So the government has much more of a regulatory role than does private enterprise. Ownership rights. The government can transfer ownership rights. If you live in a house and they want to build a road, they can take your house off you. The most forward-looking countries, they pay you some form of compensation. So they have certain rights and obligations. They have a certain right, for example, to set tax as well. So the ownership rights in the government are much greater, and the government has the right again to change the law if they don't like what's happening. Private enterprises, so PricewaterhouseCoopers and Vodafone and so on, can buy assets, and they can be owners of assets within the concept of the normal. And the final one is GFSM. GFSM are the statistics that all governments have to provide to the IMF. So the government therefore has to provide these systems. It's important when you're looking at implementation of new accounting systems, because the new accounting system must be capable of generating these statistics. I have to say, what actually happens if they can't produce these statistics, I don't know. But everybody always does. Even countries like Afghanistan produce these statistics. So this came from a background where I was teaching employees of a government, and that government was adopting new accounting standards, and we were setting up an implementation team, so they needed to be aware that these things exist, not in your syllabus for paper P5. But you should know that your government is producing statistics on GDP and so on that goes to the IMF every year, and Google them and see what they're quite interesting. Well, relatively interesting. So I put this slide in, which is ERP implementation lifecycle. I don't honestly recommend that you really spend a lot of time on this, but you should know that the thing exists, because ERP implementation includes all of the elements of all of the things that you will learn at paper P5. And actually, if I was the examiner, I think this would be quite a nice little topic to pull all the stuff together in. But I don't recommend that you spend, I think we're going to spend about 5 minutes on it now, and that's probably enough. Just be aware of this, of what this thing is. So we get the pre-selection process. Your pre-selection process will start by simply examining your system and finding out what it is that it doesn't do currently. Now again, if you're into in real life paper P5, therefore you will be looking in terms of quality, you will be looking in terms of responsibility, you'll be looking in terms of increasing the value of the information and the value of the reporting. And when I say reporting, I mean the reports that people can use to actually look at what's happening in your organisation. So the reports that the IT system produces, not your financial reports. So your pre-selection process there, and you've got gap analysis down here in the middle, but gap analysis will be done at the top. What do people want to see done better? And this is where we get this idea of business process re-engineering. So let's cut out some controls, let's design some controls, and let's make sure that the IT system works properly. Now the underlying principle here is that you're going to be getting a new IT system as well. And you know, if you look at the way computers go, we get new laptops or whatever every 3 to 5 years. So it kind of makes sense to do this as well, but it's such a big job. So you'll go through your pre-selection process, which is your quality testing, your consulting work to talk to your people, and your pre-selection process. Then what you'll do is you'll look at your package evaluation, and there's so much work you can do on this now yourself, just within Google. You know, organizations like Oracle produce Oracle PeopleSoft. Now, PeopleSoft was originally designed for construction contracts, so it works very well for companies, even though they might not be in the construction industry, where they have projects, because you have a project, and so everything within your system is set up as a project. So working at the UN, that was the one that we had. Manufacturing companies, I mean, I'm not endorsing anything, but my understanding from people I know is that SAP in general is considered to be better for manufacturing companies, and so it goes on. So ease of use and presumably how close it looks to the last one as well. So you'll go through this gap analysis, you'll go through these quality processes, you'll go through various systems, and then you'll go through the package evaluation. And let's be honest as well, your access to qualified people because the thing, it's not quite the same as buying a car. You just sit behind the wheel and turn a key. The thing then needs to be tweaked to your personal needs. So package evaluation and cost as well. You know. The bizarre thing that happened within the UN as well is so the UN now is getting SAP, whereas like UN Ops is moving to its own kind of system, where UN Women has PeopleSoft, and so we get different systems, which I don't think we can say won't talk to each other, but find it difficult to talk to each other. So what else have you got, and what have you got that you can carry forward, and what's the ease of transition of data from one system to another? Then you've got your project planning, set up your steering committee, set up the people who actually do the work underneath them, work at your IT department, blah, blah, blah. And so we'll build our committees into all of this. Once the project is underway, therefore, then you need to look at what it is you're trying to do, the data and so on. So we've got these things, the gap analysis again. You've got your dream of what this thing will do, and then the IT guys will come along and go, it doesn't do that, doesn't do that, doesn't do that. So you're going to have to change your expectations and your plan, and that will mean some changes to some processes that you plan. Certainly trying to explain to IT guys that you want two pieces of information and they've got them in different tables seems to be something that causes absolute furore for our guys. once the thing's set up, it goes through various stages. So you will have got, I'm trying to remember what they're called now. So there will be the S1 and S2, which is when they're first starting. They'll be downloading test data, so you'll be able to test things as they come off stage by stage. There's also a training unit, so if you plan the thing properly, your IT guys will build in some training into it. And then we get the configuration. Then you're going through the uploads, and uploaded by batches, so you have to have people there when the batches are uploaded. And then the testing, again, the thing that nobody ever does, of course. And also at this stage you've got end user training. So notice that you're training your guys before they go live. Then you hit live. And then there is the system of the constant testing, feeding back to the IT guys. This is something that seems to be very underdone as well, wherever I've worked. You have your IT department, they always want to run the project, they never want other guys coming in. And then of course they have to go back to their everyday jobs. And then of course when you find A, B and C doesn't work, so you've got assets with negative net book value or whatever, then you find of course that they're too busy to do anything. Oh, we'll get to that in a couple of months. But that's your diagram. I don't think it's going to come up in your exam, but you should know what it is. You should know how this thing works, because when we're doing business process re-engineering, when we're doing control processes, all of these things will affect IT, so they have an impact on everything that you do. And this is a whole implementation life cycle, but you can still have implementation life cycles for each part of the project. Okay, I hope that was interesting, and you should keep it to the front of your mind. Now what's going to happen is this is going to be the end of this lecture, so when this lecture's over, what will then happen is that we'll go to part 2, and part 2 will then say, right, this is what's in your exam. To be honest, part 2 is much more important than part 1. So see you in a few.